following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week and a great month, folks. April, here we come. Be impeccable with your word. Release the need to be right. When you believe something, you assume you're right. You may even destroy relationships in order to defend your position. Let go of the need to defend your position. Market-wise, let's take a look at it out here. We have the Dow Industrials down 652. NASDAQ is off 226. S&Ps are off 80. Big numbers out here, folks. No two ways about that. You got the Dow down 2.7%. NASDAQ is off 3.1. S&Ps are off 3.2. Gold contract caught a bid. Gold's up 18.20, 13.45.50. Silver also caught a bid, up 35 cents, $16.62. If we go over to the gold contract first, we take a look at gold. What you have out here, gold last week, pulled back into its strength from the March 21st level, as well as the March 23rd. We take off top side, you get 238,000 contracts. Not bad, not great, not bad. Bottom line, gold is on its way, I suspect, up to 1375.50. That is the high, the swing high from the 25th of January in the June contract that we're trading right now. Silver, we go take a look at the silver contract. Silver right now is up 2.1%, 35 cents. Silver trading 74,000 contracts. Good contract volume. What I do want to see with silver, you know, bottom line is I want to see this get up into the $17.02. Silver's been struggling. Last 2 times we were up here, you know, you got to 16.89 on the 6th of March. We got to 81 on the 27th, and both times, bottom line is it gave it up. Now, silver is catching a bid today, and it has a nice expansion of volume underneath that bid. Notes and bonds still are the story. Bottom line is that what we have with the 10-year note right now, 10-year note is yielding 2.72. The high for the year is 2.95. So bottom line is that we're down 225 basis points, you know, from the high that was established out here this year. Now, you're going into this February 6th time frame. 122.02 is the number. We hit 121.12. I expect you're going to get up into it. More than likely, we're going to pass it. Why? Because we look at the 30-year. The 30-year took it out today. This is a big number in the 30-year. 30-year, the high that it was a high-volume high from February 6th, 126.21, 146.21. We took it out. Have the juice behind it. If we go over to the TLT and you want to take a look at the ETF structure for the 20-year bond, that high there on February 6th is 121.82. We've hit 122.35 today. Bottom line is that the TLT will need a lot more volume at these levels because that is up there testing that level today with tremendously lighter volume. King dollar. What do we have with King dollar? So we have Europe closed out here today for Easter Monday. King dollar is bottom line basically hanging at the highs. You know, King dollar had every right last week to get up and over the high. On Wednesday, it had a nice strong day. It had price spread, had volume, had all of that. Bottom line, Thursday it couldn't perform. Today, you're going sideways. It's going to be pretty wild if it can't even test the 90.490, which was the high that was established on the 1st of March. Some of the higher volume stocks out here, what you have, we have a lot of them. GE, that thing is such a mess, it's amazing. Okay, so GE selling one of its companies, bottom line, $1 billion here, $1 billion there. What I expect you're going to see in GE, she's coming lower again. She has a low at 1273 or 13. It's going to go after the 1273. More than likely, we're going to see out of GE. As these things get sold off, they're going to realize that they have nothing else to sell, and they're still in debt up to their eyeballs. Tesla's taking it on the chin once again. Bottom line is that Tesla has gone down in the price of 3 weeks from 347. We've hit 244. Once it broke out of the range that it's been in since the February of 2017, now its game on Tesla is down at $141. The high of that is $199. The low is $140. Big numbers. The SMHs, they've been in a confirmed ABC structure on the way down. They're following through out here today. You're at 100.26. The high of the February 9th time frame is a 98. And on the SMHs, you get a 98.67 price projection. ABC structures on the way down, folks. There's a lot of them. I mean, a lot of them. Major indices, you got them in the Qs. You got them in the, well, let's actually look at the Dow for a second, okay? Because the Dow has a 1940 A to B structure. And, yeah, we'll be able to see this baby come through today. We'll find out if, in fact, it's going to be a confirmed one with the volume. The low of February 9th, 23,360. We've already broken that, 23,344. We hit into that today. Your B point on this is the 23rd. Let me pull this back to the 23rd and see where we're at in the 23rd. So 23rd, we get down with 988 million. Yeah, you might not make that today. Right now, we're at 494. More than likely, we'll probably get out of that is about 850. That being said, the NDX 100 as well as the composite, those are confirmed ABC downs. They have been since they broke down last week. You had that counter trend bounce, monster bounce, by the way. Bottom line is that couldn't even hold price, which is pretty amazing. Some of the higher volume stocks we have out here today, as you go through this market, let's go put the S&P up. So you got Intel down $3. You got Microsoft off $3. You got Nvidia down 11. Nvidia was the leader on the way down. Applied Materials down $257. Netflix is down $16.50. Walmart is down $3.74. ExxonMobil is down $2. Let's go to the energies, because guess what? That just broke out of another range. And the ExxonMobil has been building cars to do that, and it's been building cars since the February 9th time frame. So it blew away February 9th swing low out here today, $73.90. This is taking the next leg down. This is a big number, man. No doubt about it. The Exxon has that high volume swing low laying out there at $66.55. That's the next place we're going. Stay right there, folks, and we can come right back. We have the Dow Industrials right now down 571. NASDAQ is off 204. S&Ps are off 73. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 580. NASDAQ is off 206. S&Ps are down 73. Let's go over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the first hour. Don't forget, folks, Steve's got a great program right here. Every trading day, 1 to 2 Eastern Standard Time. Also has a great newsletter, Mastering Probability. The way that you can take a look at this and take advantage of this, just come over to our website at TFNN. Go to newsletters, go to trading newsletters. You can do Mastering Probability, 30 days, money back guaranteed. Steve Rhodes, what's going on?
Action Jackson.
There's no doubt, man. There's no doubt. They got window busting instead of window dressing out here.
They do. Nothing like coming back from a nice little extended holiday weekend thinking, you know, everybody's, maybe many people are still on vacation. Should just be a quiet market beginning of the month. Maybe things should move higher. Not so fast out there.
That's for sure.
Yeah. So, you know, in honor of today's route to the downside, I thought it'd be good for both you and I and our listeners and our watchers out there just to remind everybody that another bear market is coming. And what I mean by that is just statistically, if we take a look back over the last 100-plus years, since 1900, we've seen 34 bear markets. Now, I'm referring to bear markets inside of the Dow. So I'm solely focused here on the Dow, since that's where I have so much historical information, which means that the average since 1900 had been about 1 every 3.5 years. Now, during the last 70 years specifically, we've experienced 14 bear markets, so approximately 1 every 5 years. So we're actually behind schedule with regard to a bear market. So when you start to see these types of average true ranges, the Dow, the average range just over 10 days is 400-plus points out there. So it's hard to say, but this is the new normal out there, you know. 400-point swings, and folks, when I'm using when I use the term bear market, it's kind of the accepted nomenclature of a bear market of a 20% decline. Tom and I are used to just normal Fibonacci numbers in trading short-term charts, and there we're looking at 38% or 61% moves. But most people take a look at a bear market just simply being a 20% decline. And so it really ties into what I'm going to do for subscribers, Tom, next Wednesday.
Okay.
When we take a look at the 5 reasons that traders and investors fail to spot bear markets. So I'm going to do a subscriber event. It's next Wednesday, April 11th. It'll be between 5 and 6 p.m. We're going to take a look at the exact patterns present before every bear market. So I've gone back through the Dow charts and I've identified a set of patterns that has preceded every single bear market decline. We're going to take a look at the step-by-step process. I'm going to give the exact formulas out there that traders and investors can use. It will provide them with when the market is giving you a topping signal. It'll identify when to exit the trade or what it is you need to be paying attention to and to look for. How to use these patterns for trading any instrument. So maybe you don't trade the indices, you trade an individual stock, or you trade a currency pair, or you trade a commodity. You can utilize this exact same set of patterns for those instruments, and you can also use it for any time frame out there. So it's very pertinent to every trader or investor that is listening in, and also will identify how you can use this exact same strategy to identify bottoms. And the reason that it's so important, it's just a simple mathematical computation. If we take a look at the last 5 bear markets, that means 87, 90, 98, 2000, and 2007 for the Dow. We've had ranges of between a 20 to a 58% decline. 58% decline, meaning 2007. And for anyone that was indexed, whatever portion of their portfolio, whatever that might have been, let's say to the markets, to the Dow, in this case here, if you take a 58% hit, with your remaining portfolio allocated to that area, you need to generate a 138% return. In 2000, it was a 48% move to the downside. That means you needed a 92% return. So just your garden variety, 20% decline, okay. 25% return, you're back to break even. The average of these 5 bear markets has been nearly 37%. So it says you need about a 58% return on your remaining portfolio just in order to get back to break even. So it's really important, in my opinion, to be able to spot that next bear market. So now is a great time for, in my opinion, for us to put together a workshop for everyone that's listening out there. It's very easy to attend if you'd like. You just come over, as Tom said, to the newsletter page inside TFNN.com, select Mastering Probability, and you will be in. Again, it's Wednesday, April 11th. It's 5 to 6 p.m. And for folks that sign up right now, they're going to get access to my money management workshop. That's $150 value, $149 value. They're also going to get access to the horizontal trading range boundary lines, which I also thought was pertinent to these markets, whether we're going to have an A to B equals CD to the downside or just a large horizontal trading range. I don't know just yet. And markets are typically doing one of 3 things. They're either in a bullish channel going from lower left to upper right, they're in a bearish channel going from upper left to lower right, or they're in a horizontal channel. It's a possibility that we're inside a horizontal channel. And so what I thought I would do for those folks that sign up and the existing subscribers is give them access right now to the horizontal trading range boundary lines. And what we're able to do is take a chart, just a blank chart like this. This is our palette. And we like to begin with as much chart data as we can. And the very next step is for us to try to identify the largest number of opens and closes and see where there's a commonality in price out here. And if we take a look at the Dow monthly chart, we go back to 1997, what we're going to see is the areas of 10,493 and 8813, way lower than where we're at now. But that sets up the horizontal trading range area. And if we take a look at what that looks like and how this works, so those are the price points that establish these HTRs. I like to refer to them. This is a takeoff of Bud Rolf's work, primary trading ranges out here. Slightly different because of my automated tools. You're looking at the monthly chart, and you can see how those highs back in 2007, how that hit a level of resistance. That was the 13,853. Folks that look along the legend or the right-hand side of this chart here, they'll be able to see how often price actually stopped at that area. It's not how often it stops. You just really use that to set up your primary, your horizontal trading ranges, and then you take that price level and you can just simply add it to the next horizontal area. So these are equidistant channels, sideways channels out here. 23,934 is a key level on a monthly basis for the Dow, which it did hold last month. This month, maybe a different story. And if price is down below that, you're looking at 22,254. Here's the SPYs, and here's taking a look at the daily, the weekly, and the monthly. The blue levels are the daily. That's the left panel. Center panel is the weekly, and the right-hand panel is the monthly. We can see the SPYs today in today's trading got down, tested this 254.26 level. We see it close below that. It opens the door to the 230 area. The Qs, we're looking at the 153 area. That's a level inside the monthly. The weekly is 154. So these are strong areas of support that need to hold. If it fails, it goes down into the next level out here. Here's the diamonds. If we take a look at Amazon in the news today, price coming right down and testing the 1369 to 1374 level. This should be a good area of support. And how about Facebook? Facebook looks to me, Tom, like if it can bust through the lows of last week, then 135.81 is in the deck. So, folks, come on over to the homepage at TFNN.com. Workshop next Wednesday, April the 11th, 5 to 6. The 5 reasons traders fail to spot bear markets.
And so you go to newsletters, go to trading newsletters, mastering probability, 30 days, money back guarantee. You're in the workshop also. Steve, thanks so much. Look forward to the show tomorrow.
Thanks so much, Tom.
Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. The Dow right now is down to 600. NASDAQ's down 222. S&Ps are off 77. Let's go to the futures market. You had China come back today with the tariffs on agricultural products. The first one being lean hogs. And guess what? What does it do? Lean hogs, folks, down limit out here today. It's down 373.55. Let's just take a look at this. So this is... These farmers are not going to be happy, I can tell you that, man. This is just the beginning of a real mess. So this is actually an ABC down. Broke the B. So you got A, 83 cents. Yeah, we get 4, you get 7 cents. So that's approximately 72 cents anyway, 72 to 71. LH1. We'll take this and put it on a continuous contract. See where we're at. Okay, so we broke the we broke the last swing point with conviction. That sets up. This is pretty intense. That's setting up like 42 cents. This is quite a chart. Yeah, your next leg, 40 cents, man. You're at 54. That's going to be some heavy destruction. Oil took a nice hit out here today. Now, the XLE has been saying this was going to fly. Bottom line is that it hung up really for a long period of time. We had oil test its highs last week, $66.02. That was testing the high of the 25th of January. Couldn't hold it. Come off it. Now you're coming off it with volume. So now you get game on. Thus far, not that a swing yet. Yeah, you get game on for about $59. Bottom line, if the volume continues like we had today, though, 57.60 is game. If we go take a look at the XLE, what you're going to see, XLE's been building cars for quite some time for lower price. Bottom line is that the XLE right now down at $1.72. You're trading right at the February 9th swing low, $64.45. We hit $64.92. Bottom line, it looks to me like you're going to blow it away. Not today, next couple of days. Chevron, CVX. Chevron was stronger than Exxon. Chevron down 232. That's going after the 108. That's trading 111. Exxon is losing it. Exxon today, that is down $2. At 72.60, that's below the February 9th swing low. February 9th was 73.90. Bottom line is that what Exxon does have, too, that's hanging out there is another high-volume swing low that was generated in August of 2015. Now, the thing that's pretty wild, folks, about August of 2015, that was the largest pullback we have had in the marketplace outside of right now. And what you're seeing here is that you got Exxon going after it. So the real question is going to be, does it not only just go after it, but do we basically blow that baby away? That's when oil had gone from $104 down to 27. Exxon went from $104 in July down to 66. Did a nice counter trend bounce up to 95. Now you're coming right back in that whole area. Intel, we go take a look at Intel. Apple saying that they're going to be using their own chips, not Intel chips, as of March of 2020, in the Max. Intel's down $3.50, and let's see. So do we get back? Yeah, you get back inside the lower range. Now this is going to be a problem because when we broke out of the range from January, you broke out in tremendously lighter volume. Intel's been a performer in a big way in this marketplace, and we'll see whether they get follow through. So you're coming down today, you get some juice in the way down, but if you get follow through, man, Intel then will be game for $42, and right now you're at 48. The Nvidia, that was the leader on the way down last November. It has been the leader on the way down in this downdraft right now. Nvidia is into the trading from February 6th. The high of that was 225. We're at 217. So the low is game. It's got a high volume low, 204. That is game big time. Amazon. What do we got with Amazon? Amazon down into the February 9th level also. 1383 was the high of the low. Bottom line, now the low is wide open to be basically going after. And what Amazon does have is this. Amazon now has volume off the high, as do a lot of these other equities. So depending on how we hit the bottom, which is 1265, we're already into the bar. We're into the bar by $30. That brings the probability much higher. You're going to go after the bottom of the bar. You go after that bottom of the bar with volume and then get out of the way, man, because Amazon, as do a lot of other equities, have some big gaps left over from the earnings that came out in October. In Amazon's case, you're talking about 982, and right now you're at 1358. If we go over to Google, Google was trying to get into that gap. Google's down $33 right now at 998, And this baby, bottom line, not only has come into this February 9th time frame, you're coming in here, and this baby looks to me like it's going to get into that gap, which is 987. Right now, Google has done 2.1 million shares. You haven't made it to the low of last week, which in Google's case, that is actually dangerous. You know, if you're a bull here on Google, you would love to see that thing tested today, and it's not. And that's going to be a problem when you take a look at building cars for lower price. Inside the NDX 100, there's not one stock that's positive. The biggest leader on the way down, Intel. Intel's down 6.5%. Netflix is off 6.4%. Tesla is down 5.7%. You know, Tesla broke down last week. Bottom line, a lot lower prices coming at you in Tesla. Netflix, NFLX. We take a look at Netflix. Netflix volume is contracting on Netflix, but that good old February 9th time frame is out there that wants to get hit also. The Walmart. Walmart looks like they're talking quite a bit with Humana, bottom line about hooking up, either taking them over, doing some kind of a deal. And Walmart looks to me like this is going to be really wild, man. Walmart, close call. Yeah, you know, Walmart very well is setting up, and maybe is going to be a confirmed ABC down in the next 30 minutes. We've already broken the price. And if that's going to be the case, it'd be interesting. It should be 105. It's a big one, man. It's a 20-point A to B, which would get you 70 bucks. And we're at 85. And we put this back 70 bucks, man. You got to go back quite a bit for 70 bucks. So okay, so Walmart just got back inside the lower range. $70 is almost where it broke out from July of 2012. This is going to be serious business, man. And when you look at Walmart, this is what you have at Walmart, too. When you look at Walmart, this is volume off the highs also. We hit a high on a monthly basis in January, 169 million shares. You come off the, hey, check this out. Now, this is, okay, this is problematic big time. So, you hit a high January of this year, 169 million shares. You come off the high with 307. That unloaded this thing in a big way. And you're inside the lower range. Stay right there, folks. Coming right back. Our phone number is 877-927-6648. We have the Dow Industrials down 611. NASDAQ off 231. S&Ps are down 76. We'll come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 601. S&Ps are down 76. NASDAQ is down 230. Let's go over and take a look at the GDX gold contract, XAU, HUI. So GDX out here, we're going to need more of a volume on the GDX also. GDX, we're up 25 cents. You're at 28 million now. What will happen with the GDX is that we will get some good volume at the end of the day. I'd like to get 20 million. That'd be pushing it, I think, though. Volume can come in pretty good, but more than likely get 13, 14 million, which is not bad. You know, we'll see where we're at. I want this baby to get up somewhere into the 44 million mark, and right now we're at 28 million. If we go to the XAU, we take a look at the gold and silver index. That XAU is up 88 cents. We're right at the swing high of the 26th, which is 82.77. We hit 82.69. And the gold bugs index. The gold bugs index, what it did with both the XAU and the HUI did last week, folks, is that they had pulled back in to this strength from the March 21st as well as the March 23rd level. Bottom line, rejected lower price, had a nice day on Friday when the actual gold contract didn't. And then what we have out here this morning is that you're going into your swing highs that were established from in March 6th as well as the 26th. Now that number is 179.75 inside the gold bugs index. Today we reached 179.60. Bottom line is that we'll see whether they get the volume. What the gold bugs index did do is that last week it got back inside its higher range, and that higher range, anything over the 174 is a big number. We go take a look at a couple of the higher weightings inside there. You get Barrick Gold. That's going to need more juice. That's up 18 cents. That's going into 12 million. It's not bad. We get 8. Bottom line, you'd still like to see more. Newmont, we take a look at Newmont. Newmont, bottom line, up 13 cents. That's definitely going to need more volume. Now, the difference with Newmont is that Newmont has been in much higher consolidation than most of these other golds. Royal Gold, we take a look at Royal. Now, Royal is a royalty stock, has been the leader for quite some time now, and bottom line is that what this has done is that you got over the swing, so it's going after the January 25th swing high, which is that $90.51, which is a huge positive in the context of gold, physical gold going higher, as well as the equities. We go take a look at Gold Corp. Gold Corp, no doubt, one of the leaders out here. That's up 20 cents right now, $14.02. That's taken over the $14.07 level. 14.18 we hit today, but that's also going to need volume. Now, the cool thing about Gold Corp is that it has a high volume high at the January 16th level. That's a big number. We take a look at Harmony, which is a South African equity. This thing has gone higher on a continual basis. This was actually one of the first ones that was off the low. It's gone from $1.74 to $2.48. The thing that you're going to keep your eye on with Harmony is this, is that your swing high is at $2.99. If that can get that into that level, which I expect will go on, because the low of that level is $2.65. We've hit $2.51 thus far. Then you have a shot for real action in this equity. The reason being is that that would bring you in a much larger range, you know, how we take over this 487 number. The Facebook, let's go take a look at Facebook. You get Facebook has enough problems now. Facebook and Apple, Zuckerberg and looks like Cook are gonna they're going at it tit for tat. Bottom line is that this got a high volume low at 149. You're at 155. That's going to get tested. You take a look at this on a monthly, and it's a mess. On a monthly, the game is at 131. You know, then this also come off the high with volumes. What we're going to be able to see out here is that when you come off these highs with volumes, just what type of a correction on the way back you're going to be looking at, because what you certainly have out here is that when you come off highs with volumes, it turns problematic. Why? Because number one, you get big selling on the way down. Number two, though, and this is what the larger deal that you like to get out of this, is that when funds come into stocks, the reason that they can keep going higher and higher and higher is that what you get as they're pulling back, what is going on is that the sponsor of the stock, the fund, bottom line, they buy on pullbacks. As they buy on pullbacks, that gets it the support, that gets it everything you need. It seems that when we come off highs with high volume, what you have there is that funds are getting out of the stocks and they get out of them totally, and then what ends up happening is you're pulling back down. There's no one sitting there buying them in order to support those levels, and that's why you have that high volume spike. And every time that I've seen this, and you need a couple bars. It's not just 1 week. You need 1 week, and you get a follow through the next week. That's big time problem. And most times what you have there is that you get a much larger correction than you normally would have. If we go take a look at these S&Ps for a second, you just had a little pop inside the E-minis. The E-minis just popped from, let's see, we just popped from 25.59 to 29.574. Bottom line is we'll see how this next, oh, it's only 12 minutes. Next 12 minutes into the close goes. If we do take a look at the volume inside the SPY, what you're going to see out here is that you're 137 million. That's big numbers, man. That's big numbers. You already got a confirmed ABC structure. Well, actually, the SPY would need more than 183 for an ABC down. But what you do have is that you are deep into the February 9th time frame. The top of that, 263. The bottom, 252. We're at 256.91. 254 was the low. The small caps. Let's go take a look at the small caps and see what we got with the small caps. This baby's down 330, 26 million shares traded. That's big volume also. 148 and 147 is 94 is the top of that high volume low from the 9th. Now the difference in the small caps is that the 6th was the high volume low, 69 million, and then the 9th it got to 53 million. That's where a turnaround came. So we're definitely into the high volume spigot here. Now what also happens inside the small caps is that this range, the top, the 144.25 is the higher range. It's held, and on the weekly basis, this 142 is still sticking out like a sore thumb. You break that, and then you're talking about big trouble if we actually do break that area, because that would be like Tesla, how Tesla broke down. And when Tesla broke down, that little baby, once it had built cars for about 3 months, but once you had broke that area, get out of the way, because that was problematic in a absolutely huge way. Apple, let's go over and take a look at Apple. Apple right now trading down $1. You're going into the lows of last week, and 31 million versus 41 million. Bottom line, we'll see how this shakes out in the next few minutes. Dow Industrials right now trading down 488. NASDAQ is down 189. S&Ps are off 64. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow down 440, NASDAQ's down 178, S&Ps are off 60. That's let's see, 1.8% in the Dow, 2.7 in the S&P, 2.5 in the NASDAQ. You get a little bounce coming into the close, but it's not going to be pleasant for people's portfolios out here today. Let's go take a look at, so we had Europe that was closed today for the Easter holiday. Easter Monday. If we go over to the Nikkei, what you're going to see here is that inside the Nikkei, bottom line is that we're trading at 21,388. You are at the February 6th time frame, 21,200 to 21,000 flat out. And we expect you're going to see down here tonight, this had already swung into a low on March 20th of 20,347. It looks to me like last night you had a failure on price, had the failure on volume. You popped up dramatically lighter volume. You had popped up with 490 million shares going into 1.9 billion. So Nikkei out here tonight, bottom line is that more than likely is going to jump the creek once again at this 21,078 area and go after its swing low. That was established last week at that 20,345 area. So there will be action, no doubt, in Asia tonight. With our markets taking a beating with the tariffs that are basically getting done between, you know, the aluminum, the steel. Now what you're talking about is that it's getting into agriculturals. That brought down lean hogs limit out here today. Bottom line is that you're at 73 a pound, 73.5 a pound. It looks to me like those babies are actually going to go a lot lower. We go take a look at the volume inside the indices out here today. We're at 600 million right now in the NYSE. That'll do about 850. They'll put a couple hundred million into that close. Composite's going to have volume. We're at 2.1. They'll throw about a couple hundred million into that. That'll be about 2.3, 2.4 billion. Stay right there, folks. Going to be coming back with lots of numbers after the close. Dow right now is down 466. S&P's down 62. NASDAQ down 187. Coming right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Got our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Surrender and let go of the past. Whatever life takes away from you, let it go. When you surrender and let go of the past, you allow yourself to be able to live fully alive in the moment. Letting go of the past means that you can enjoy the dream that is right here, right now. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials down 258, NASDAQ down 193, S&P's down 66. Bottom line is that the market goes south. Has some juice behind the move. In the NYSE, you're at 915 million. On the NASDAQ composite, what we did out here, we did 2.3 billion. Big numbers, right across all the boards. Gold and silver. Gold and silver caught a bid. We had the gold contract up $17.80 at $13.45. Silver up 32 cents, $16.59. Light sweet crude, that came down on volume, down $1.78, trading $63.10. If we go over to the XLE, what you'll see with the XLE, that's trying to break out its lows. We get down $1.37 today. Your high volume swing low is $64.45. We hit $64.92 today. I expect you're going to be right back down there tomorrow morning, trying to go after that and try to bust that loose. ExxonMobil has busted it loose. Exxon traded down $1.39. You're at $73.22. The high volume low was $73.90. So bottom line, Exxon under that level right now. Has some juice underneath that level also. The GDX inside the gold market, our bottom line is that we got some juice at the end of the day, which we needed. We knew we were going to get volume in there. Would like to see a little bit more. I was looking for 41 million. We get 38. Not bad. Not great. Not bad. That's going into the swing point from the 26th, which is $22.51. Right now, you're at $22.23. King dollar. So, King dollar, folks, bottom line, last week had a shot to get up into this March 1st high, which is 90.490. Bottom line, just laid there. The way the King dollar traded out here today, bottom line, looks like King dollar is going to make its way back into the 88 area once again. And if that's what you get, we are going to see that metals contract go topside and go topside in a big way. Notes and bonds, bottom line, notes and bonds, one higher price. What you had out here today is that they traded flat. They actually traded higher, gave it up on price, pulled back slightly. That being said, you have the 30-year right now at the February 6th high. So if you remember, the benchmark inside the indices of February 6th, February 9th. February 6th, that's the huge downdraft. That's what all these high-volume lows are out there. That's what the market's been going after. Some of them would get broken. Exxon already broke his. XLE is into it. Bottom line, the NDX 100, that is a confirmed ABC structure on the way down. And you're deep into that bar from the 9th right now. The top of that bar is 157.24. Bottom is 150. Your ABC structure on the way down gives you a price projection of the 148.84 level. And I expect that we're going to get there. Now, the danger is going to be inside the many of the markets, not just the NDX 100, is that we have lots of gaps that are left over from October 26th to October 27th. That was a big day. Bottom line, we busted topside with volume. Google almost came down into that level today. If we look at Google, Google's down $25. You're at 1,006. You hit a price point of $990. And the top of that, filled in the gap, is $987. So it's pretty wild. That gap, bottom line, looks to me like it still wants to get filled. Some of the higher volume stocks out here today, well, here, inside the NDX 100, I believe this is, I don't think there was one stock that was positive. No, there wasn't one stock inside the NDX was positive. The leaders on the way down, Intel was down 6%, Amazon was down 5%, Tesla was down 5%, Netflix was down 5%. Inside the Dow Industrials, we did have two stocks that were positive. You had United Health was up 1%. McDonald's was up 0.8%. The rest of them were taking a beating. Cisco. Cisco was down at 4.3%. Walmart was down 3.8%. The deal on Walmart, looking at Humana, Walmart came down, folks, and came down on volume. So, yeah, you get a confirmed ABC down. Walmart's in trouble. This is a decent ABC down, too. You're at $85. And what we're going to get with Walmart here, let me put this on a monthly for a second. So we hit a high with 41 million in January. You come off the high with 63. We'll see whether, yeah, you go down last month with 62. That's coming down with some juice. Walmart is making its way inside its lower range. Now, Walmart, once it gets, well, if it gets back inside 81, then there's a problem. And it's going to be a pretty good problem because then 56, well, 60 is wide open. And you get inside of that, these trading ranges, what we've seen with the ranges is that you've had a few large stocks break down, come back inside the lower range. Tesla is one of them, big ones that have broken down. That was building cars for a long period of time to basically break inside its lower range, and it did it with velocity. And the lower range in Tesla started at 286, and right now you're down to 252. That gets game up to 141. Let me tell you something. If Tesla's at 141 after being at a high on the September of 2017 at 389, that is going to be some heavy-duty losses going back for quite some time. GE is down to 36 cents. GE sold, going to sell one of its basically companies getting $1 billion. What I expect, what you're going to see at GE, this going after 1273, and what you're going to end up, you know, another couple weeks or whatever, they're going to, let's see, let me pull this. There it is. So GE, okay, so it's going to sell a bundle of its healthcare information technology business to private equity firm Veritas for $1.05 billion in cash. What I expect you're going to see out of this, folks, is that someone's going to bisect and dissect GE and start realizing on their balance sheet just how much they basically had that valued at, and guess what? I bet it's going to be a lot more than a $1 billion they just got on cash. Stay right there, folks. We're coming right back. We have the Dow finished down 450, NASDAQ down 193, S&P's off 68. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. And one of our Tigers are asking about the Walmart family holdings, and they're not selling anything, folks. Bottom line is that they actually can't sell. Well, they can sell, but if they sell that, any big amount, it would get them underneath the 50%, because the way that they've always run that whole deal is that they stay over that 50%. If you can see, looking at this, you get Walton Enterprises. They have 47.9%. You get Walton Family Holdings, 2.75%. That gets you over the 50. And then, of course, on top of that, though, as long as you control the company, then you're also going to control the 401k. And inside the 401k, this would be employees. That's 1.48. Bottom line is that I don't expect them to sell anything either. I just don't see it happening, because Walmart, guess what? Walmart's going to be around forever. And not only that, let me just look at this for a second. So, yeah, so Walmart also pays a dividend of 2.4%. So just check that out. A dividend of 2.4% on that many shares, you are talking about monster bread to live on a continual basis. It's a big number. So check this out. So this is quite a stat right here. Yeah, let me pull this up on this side. And you know, we're in window dressing right now, but look at this stat here. This is pretty wild. The S&P is heading for the third largest sell-off of the year. It's interesting that the biggest loss in 2018 was the day before the high volume low. That occurred on February 5th, which also happened to be a Monday. But listen to this stat. Mondays have a disproportionately high number of large sell-offs. If you bring this back to, this is a Bloomberg stat right here. If you bring this back to 1928, 31% of the days when the S&P fell more than 2% was on a Monday. Pretty wild, man. You know, and it's like, you know, what they're saying here is folks thinking over the weekend, like, what are we going to do? We're getting back. It's hard to tell. If we do go look at the, let's go look at the S&P here, because what we've been focusing on is this high volume low from February 6th. And what we had is that prior Monday, where the contraction that we're right in now actually started on January 29th. That was the high. On February 5th, the S&P went from, this is the SPY, went from 275 to 263. You come down to 294 million shares. The following day, which was the first low, on the 6th, you went to 258. You did 355 million. Then what we had done is that it tried to bounce on that Wednesday, got to 272, but gave it up, came right back at you, and this is where it went down on the 9th. And I believe the 9th was, might have been Fed Day, right? We got down to 252, but had lighter volume, rejected lower price. That's where we got the huge counter-trend bounce. That counter-trend bounce went up to 280, and guess what? Volume was dying on the vine, did 91 million shares. You're going into 173 as well as 294 million, and volume blows out once again. And bottom line is that we had volume blowout today. We only missed confirming an ABC structure on the way down by 3 million shares today. We did 180 million shares as you took out the low of last week, which is 257.83. And we're below the low. So that does set up that we're going to be going right after this 252.92 tomorrow. Now, what's going to get intriguing is this. And, okay, so Easter Monday in Europe today, Europe was closed. Asia was open last night. Asia gave it up on price last night. Asia started higher, ended lower. What I expect you're going to see out here tonight, we have Australia opening in 4 hours. I expect Asia to be down. Now, this is going to be the huge problem. Because Europe was down, Europe was off. We, in the UK, the FTSE 100 as well as the DAX in Germany have already basically give us the heads up that the markets themselves were going after the high volume low from February 6th. The UK had already taken it out. The UK took it out on March 19th. And so what I expect you're going to see here is that the UK is going to gap down pretty dramatically tonight, right? We're at 7,056. Had a low last week of 68.66. Bottom line, this thing looks to me, let me pull this back for a bit, that, yeah, we're going to gap below 68, below 6,900. And what that does, that sets up the FTSE 100 going into the lower part of its next range, which is 5,400. The DAX in Germany, we go to the DAX. We take a look at the DAX. The DAX was up 156 bucks on Friday. That's still not enough because the February 6th level is at 12,232. We're only at 12,096. I expect what you're going to see, the DAX is going to get blown away at the open. And the DAX is making its way. Yeah, it looks like the DAX is making its this range here that we're in, 11,000. Listen, 11,860 is the next level, but I suspect that's going to get blown away at that open tomorrow. And then the DAX very well could be down to 11,200, which is 800 points from where we are right now. That is a monster number. But you want to remember that it was the FTSE 100 that, bottom line, broke that level and broke it with some real volume. So that's going to be problematic. And if that's what we get, you're going to see follow-through coming fast and furious at us. It's going to be really tough for the FTSE or the DAX to get any traction whatsoever. The reason being is that because we came down so dramatically and the DAX was closed, just the catch-up on that alone is going to get us into lower prices. That's how that shakes out. We go, let's take a look at the final volume inside the Qs. Well, there she is. The Qs did, this is exploding with volume. So the Qs did 84 million, taking out the B point once again of 80 million. So you get, the Qs are in tough shape. And that would make sense because bottom line is that the high flyers are in the Qs. The Qs take you up, the Qs take you down. If we go to the NASDAQ composite, what you're going to see, the composite also is right into the bar from February 9th. So we're already blown away February 6th. Let me see. February 6th. Yeah, February 6th. The low of February 6th is 68.24. We hit 68.05 today. So February 6th level already got done. Now it's working on where the market turned and had a huge turn. Now this is a heads up also because when we turned on February 9th, you know, bottom line, the market did what it was supposed to do. That being said, if you're into candlestick charting, when you have a type of failure like this and you get into the size of this hammer that was out there is a monster. That's not positive, man. That is negative in a huge way. Stay right there, folks. Coming back with some more numbers. We had the Dow Industrials finished down 458. NASDAQ down 193. S&P's off 68. We'll come right back.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks, in Google. So we've been talking about Google. We've been talking about Google and talking about how, you have the high volume low, number one, but you get this gap that's open. So Google just came out. This is going to be interesting. So Google comes out with its numbers, folks, April 23rd, I believe. Yeah, April 23rd. So that's going to be a big day period because normally when Google comes out, let me go see what Facebook is. Facebook's the 25th. Google's the 23rd. Amazon is the 26th. Okay, so the 26th is going to be a big day. So Google just came across the tape, though. Now listen to this. They're giving a little heads up as to they're going to be changing. Here, let me read this for you. They're going to be changing some things about how they deliver their earnings and specifically how they deliver their advertising part of it. Alphabet is changing a closely watched measure of Google's digital advertising business and adjusting how it accounts for some stock holdings, a move that will be reported that they're saying will make income more volatile. The main difference is in how Google discloses the performance of its network business, which runs ads on thousands of third-party websites. This will no longer be reported on a cost-per-click basis or how many times the ad are clicked on. Now, the cost-per-click basis has been going down for quite some time on Google, folks, okay? Their revenue's been going up because more people, but the cost-per-click has been going down. This is intriguing just in itself. Instead, Google will report changes based on the cost per impression, the number of times the ads are viewed. In the fourth quarter of 2017, Google reported $5 billion in sales from the network sites. The company also said that unrealized gains and losses on non-marketable equities, such as investments in private companies, will be reported as part of income. Now, that one's interesting because when you have investments in non-marketable securities, it's always tough, folks, to actually guesstimate what those securities are actually worth. The tech giant has backed many large, closely held companies such as Uber, Lyft, and Magic Leap. As a result of this, also, they expect increased volatility in their income statements. Finally, they are going to start to report sales from Nest, its connected home device division, under which Google, rather than a catch-all other bets segment. Nest moved to become part of Google's hardware business in February. Now, that part there, I expect what you're going to see, Nest, they're going to be doing some business, folks. What has happened, Nest, no doubt, basically caught on pretty heavily. And if they're breaking that out now, you are going to see an expansion of volume and growth inside that whole Nest business. Let's go to Mike in Toronto. Hey, Mike, what's going on?
Hi, thanks for taking my call.
Sure.
Could you take a look at a TSX listed stock? It's called Corvus Minerals. It's making a new 52-week high.
What, okay, it's K-O-R?
Yeah, K-O-R or C-O-R. It's around 250.
Corvus Gold, right?
Today.
I get Corvus Gold, right?
Yeah. Can you tell me
242.
something about that company?
Okay, let's take a look. You get 242. The low is 69 cents. The high is 250.
Made it today.
Yeah. Let's see what we got here. So you still got no income.
Okay.
So what is this baby doing right now?
That's why I'm calling you. Every day, new 52-week highs.
Okay, so they're still. I remember these guys. These guys had a booth beside us years ago. So let's see. What are they? They're working on high-grade feeder hits, 7.5, 21 ounces per downhole.
Where are they mining? What country?
Alaska and Nevada. Yeah, so they're in the right spot. I remember this company, but I just don't remember what. So let me see. So you got an ABC up. Let me put this on a daily, a weekly. So this is strong. You know, I wouldn't be buying it right here, but bottom line, you can see, you know, you went topside.
Yeah. How many shares outstanding?
Let's see. You got 104 million.
How much cash in the bank?
Yeah, I can't go through that much at the same time. I'm not sure. Bottom line is that it's not a bad setup, but, you know, I'd find out more about it before you step into it, man.
Yeah, so you don't know much about it, though. It's somewhere in Nevada?
No, it's a Canadian company. They're doing business in Nevada as well as Alaska. Let me see if I can find out where this first one is. There it is. Okay.
Is it a famous mining promoter like Catherine Gignac?
No.
You recognize them?
No, I don't know. You gotta. I don't know.
Oh, okay.
I don't know.
All right, thanks.
Have a great one, man. Have a safe one. Bottom line is that what you do want to do when you're looking for companies like that, they had drill results that came out. You want to know how close they are to getting a mine up and going. So this is what happens with a exploration stock, which that it was, folks, is that in the exploration phase, right, as they're finding ore, if they find ore and they get good ore, and the market feels that they can get the ore out of the rock. So first, you know, you get an exploration stock, you find the ore. Now, they're in two great countries, well, states, in order to basically get the ore out. Alaska and Nevada, I'd say in the United States, they're the two best mining states there are. So they're not going to have a political problem. Well, they shouldn't have a political problem. It's not like Northern Dynasty up in Alaska. They're trying to basically go where the Indians are. Different ballgame. So that being said, what ends up happening is as you get the exploration play, you have the ore. The ore is a rock. The question is, can you get the amount of metal out of the rock? That's what they're looking at right now. So picture, when you're in the exploration phase, that's when you can get expansion of price very quickly. What ends up happening is this, and this is where it's always a danger, is that if you are going to stay in the equity, when they actually go to the production of the mine, you are taking a much larger risk. Because what ends up happening is that Number one, a lot of these exploration companies have never made a mine. You know, they're in the business of finding gold to sell it to larger players. Some of them want to do it, and that's fine. Just be aware that if they're going to build a mine, building a mine is $500, $700 million. And guess what? You're talking about 5, 6 years to get the mine going. And the question is, okay, so now I had to raise a huge amount of money. We have time, and then what we got to put together is the aspect of, okay, is gold and silver still going to be high 5 years from now? You get the whole gist of it, you know. 877-927-6648. Dow finished down 450. NASDAQ off 193. S&P's off 64. Stay right there, folks. Come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Basil Chapman has just announced that on Tuesday, April 3rd at 6 p.m., he'll be hosting a special 90-minute webinar for all of his subscribers titled The Power of the Fourth Highest Peak, the Peak D in the Chapman Wave. During this 90-minute live webinar, Basil will be discussing how to use the fourth highest peak, the Peak D, as a heads-up for either a directional reversal of consequence or a momentary pit stop for further gains in the Chapman Wave. He'll also be going over what the weekly and monthly implications are for the key indices with their peak Ds and even peak Es, together with the H pattern in the Chapman Wave that he's been following for weeks with his subscribers. Now is a perfect time to sign up for Basil's daily trading service, The Opening Call, while gaining access to the April 3rd live online webinar. Remember, all new subscribers get a 30-day money-back guarantee, so you have nothing to lose. For all the details and to sign up today for Basil's Opening Call, visit the front page of TFNN.com.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go over and take a look at Intel. So Intel out here today traded down and traded down hard. Down $3, $48.92. Intel has been a strong like bull. Bottom line is that what this is all about today has to do with Apple. You know, Intel also came back inside a lower range. Once it got back inside $50.85, it sets up that it can go test 42. So it's quite a number. Apple came out with a statement today saying that they plan on using their own chips in Mac computers beginning in the first quarter of 2020. Which, by the way, is only 2 years away, which is pretty amazing. Replacing processors made by Intel. Let's see. So this comes as a larger strategy to make all of Apple's devices, including Mac, iPhones, and iPads, work seamlessly together using basically a new chip that good old Apple is developing. Let's see how the shift would be a blow to Intel, whose partnership to help revive Apple's Mac success and linked the chip maker with one of the leading brands in electronics. Apple provides Intel with about 5% of its annual revenue. Okay, so there you go. Apple provides Intel 5% of its annual revenue. That's not the end of the world, but that's a big number, man. So let's go take a look at, let's see, Intel. We were probably in shock when we look at what they make, period. Gross. So they're grossing, oh my God, look at this. So you're talking big numbers, man. So we're talking $3.2 billion just from that, let's see, Apple could still okay, so that $3.2 billion, though, that's all the chips, not just from Macs, because it looks like when you're reading this note from Apple, bottom line is they're going to start off with the aspect of the Macs. Intel chips remain some of the only major processing components designed by others inside Apple products portfolio. Currently, all iPhones, iPads, Apple Watches, Apple TVs use main processors designed by Apple and based on technology from ARM Holdings. Oh, interesting. Moving to its own chips inside Macs would let Apple release new models on its own timelines instead of relying on Intel's processor roadmap. I see. So bottom line is that, yeah, so that would be $3.5 billion in sales and you know what happens there, folks, so where you're going to make that up. Bottom line is that that's not going to be made up real quickly. So the company had previously released Macs with ARM-based processors which run the iOS for specific functions like security. The latest MacBook Pro and MacBook include co-processors. Apple plans to add a chip to that new version of a Mac Pro to be released next year. Intel has dominated the computing process for more than a decade, taking market share from advanced micro devices, its only rival in the market. So bottom line is that you get big numbers out here. Let's go, we stay with the chip business for a second. Well, actually, if you go over the SMHs, what you're going to see, SMHs also confirmed ABC structure on the way down. We're at down 382. This also blew out volume again today. This is a complex ABC structure also, too, but guess what? Came right back in spades. What a complex ABC down, folks, is this. Is that you take a B point out, take it out with volume, you do a counter trend bounce, which we did. We did that counter trend bounce last week. You have lighter volume in the counter trend bounce, and you go right after the B point again. What is unusual is you don't need to have the volume once again as you're taking the ABC structure out on the way down. And SMH's case, you had it. In the Q's case, you had it. In the NDX, I'll have to check out, the NDX 100, you got to check out the composite. Bottom line is that the SMH's has a price projection of $98.67. That's a 1-to-1 ABC down, and 98.43 is the high of the low of the ninth. The low is 93. And it looks to me like we put this on a weekly, and what you're going to see is that the weekly's been hanging out there wanting to get tested, meaning the $93.88, and I expect we're going to get on there and get it tested, and we'll find out what kind of juice it has. When we get down there, what's going to be kind of intriguing is that goes from October of 2017. That's where we would be right now. Right now, anyone that bought this back going from, let's see, November of 2017, bottom line would be in a losing position. And that can get problematic in the aspect of as these indices come down, because we've gone up for so long, people really haven't paid attention to their portfolios. bottom line, all of a sudden you look at your portfolio, they look at the aspect of where it is, and they say, okay, what the heck just happened here? Let's go to Warren in Pueblo, Colorado. Hey, Warren, what's going on?
Really good. I see what you're saying about SMHs. That looks dangerous coming up at that bottom right there.
No doubt.
I was looking at TBT and TBF. And why is this not a long-term, if there really is an end to the bond bull market, why is why are either one of these, TBT or TBF, not an appropriate place to go right now? Is kind of, not maybe right now, but I'm just looking at these to buy them as bonds increase. The interest rate and the price goes down.
So let's first take a look at this. So the TBT or the TBF, is that the, okay. So the TBF is the, let's see, ProShares cash on cash. So this is, okay, so this one here is just a 1-to-1, the TBF.
Right.
Okay, so the TBF, bottom line is that wouldn't be a problem. Now, I want to answer this two different ways, okay? Because I'm not a believer. The bonds, the price have been going up again, yields going down. So I'm not a bear in the bond market. But as to, if you are, that's cool, and yes, on a long-term basis, that'd be fine. The TBT, however, do not even think about that, because any of the doubles or triples, right?
Yes.
On a long-term basis, do not work for a trend.
Okay.
Okay.
That was my question about that.
Right. You could be a bull or a bear in any of the doubles or triples, and the reason is that they're daily investment vehicles, and each and every day, bottom line is that they reprice. And any type of trend, you could be going down or going up forever, and as soon as you go sideways, they both lose value, you know. And so, you know, and to go back to the bond market, bottom line is that, you know, the bonds will find out if long-term rates are going up. You know, thus far, when you actually look at this bond market has gone sideways, and the bond market basically bottoms, meaning higher rates, on February 15th.
Yes. It's clearly, I mean, bonds are clearly, I mean, at some point, I mean, maybe not right now, they're running to the safety of bonds now, but that safety of bonds may end pretty, I mean, not tomorrow, but maybe, you know, in this quarter sometime.
Yeah, no, I see what you're saying. Listen, fundamentally it makes sense, but it's made sense fundamentally for a long period of time, man.
Right.
Cooking, brother.
Go site-wise longer than I'm liquid, for sure.
Have a great one, man. Have a safe one. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, as you come over to our website at TFNN, our man, Mr. Basil Chapman, tomorrow night, folks, he's going to be doing a great workshop. It's called The Power of the Fourth Highest Peak inside the Chapman Wave. This workshop is going to be from 6 to 7:30 tomorrow night, Tuesday night. The way you can come into this workshop, you just come over to our website at TFNN. You'll take Basil's newsletter for a full month. That's a 30-day money-back guarantee. You're going to get a great newsletter for a month. Come into the workshop tomorrow night. Bottom line, Basil's going to be talking about how to use the fourth highest peak, Peak D, as it heads up in either direction. Meaning, is it a reversal of consequence, or is it a momentary pit stop for further gains? And then what are the weekly and monthly implications in the key indices with their peak Ds and even peak Es together inside the Chapman Wave. So check that out on the front page of TFNN. Bottom line, you can get in tonight. You'll get a great newsletter tomorrow morning, as well as come into that workshop tomorrow night. UPS, this is really intriguing inside UPS. Okay, we got you know, Trump talking about Amazon, the post office, the whole ball of wax. UPS, folks, is in trouble. UPS is off a high of $135. You're at 133. 103 rather. You're right at the high volume swing low from the 9th. And guess what? You are jamming into this high volume swing low with volume. So this is going to be a little problem child for UPS. UPS right now is trading back where it traded in, let's see, January of 2014. You also have a high volume low that's sticking out at 96 to 87. It looks like it's going to happen. And if you've been talking about volume off of highs, with high volume, UPS has it. It had made a high in January at 79 million, come off the high with 131 million. Last month we did 93 million. That's follow through with volume. Bottom line, you're building cars to get into this 92 area. So that is a big problem. And the bottom line is that the FedEx, is down off a high of 270, 238, but it doesn't have the problems that the UPS does. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Have a blast with it. Look forward to speaking right back here tomorrow morning, 8 o'clock. Wow! Go get them, folks.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out